Okay, alhamdulillah, alhamdulillah, Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatan min lisani yafqahu qawli. All right, so Bismillah. So alhamdulillah, we are this is our second session. So let me just bring us to the slides that we were on. All right, so we went through the first two chapters already. Let's just go to chapter 3, which is cost accounting. So I emailed you the summary notes as usual, and then the questions that you'll do after this. So, all right, so we finished chapters 1 and chapters 2, and we also did the practice questions. So let's just go to, all right. Yeah, I think, yeah, chapter 3 is, okay, we're going to this. Okay, good. All right, so Bismillah. So we're going to be looking at cost classification first and then cost behavior. So those are the two things that are in the chapter. In the first chapter, we spoke about the need for information to assist with planning, control, and decision making. Now, cost classification, actually the management accounting paper is normally called the costing paper. So cost classification is a key component of management accounting. All right, so the total cost of some of the things we need to know when we do the aim of costing basically is to know how much is the cost to produce an item or the cost of a service. So generally we need to put information together to know the cost of materials, cost of wages and salaries, and cost of other expenses. The different type of costs we have are direct costs and indirect costs. Now, direct cost is a cost you can trace to the product or the service or the department that it is being costed to. So in making bread, you can trace the flour to the bread. You can trace the baking powder to the bread. So you can trace specific items to the bread itself. That's direct material. Direct labor, again, the time it takes to make the bread. Any other direct expenses related. So, okay, the bags for the bread, whatever, anything that is directly related. Now, all the direct costs, material, labor, and expenses, all of them combined is known as prime cost. And this is something you would have basically been exposed to in manufacturing accounts. Well, pretty much it's the same thing. So direct material cost, as we say, is that this is the cost that the materials that you have to include in making the product or providing the service. So there may be component parts that are specially purchased for a particular job. There may be part finish work, like what we call work in progress. And there may be primary packaging materials, so the bags they put the bread in, the boxes. So those are primary material that is a part that comes a part of the product. You can trace that directly to the product itself. So direct labor cost basically is, as we know, labor you can trace specifically to the product. So this would be like, okay, each staff member would make this amount. They use this amount of time in the production department. So you can trace it directly to the making of the product or the provision of the services. So that would have been the direct labor cost. And other direct expenses is the same thing, the same concept. So if you have to hire some tools or equipment for a specific job, then you have to cost it to that specific job. And certain maintenance costs of particular tools or fixtures, then if that directly relate to items that are used to produce specific items, then you trace those costs to those specific items. Indirect, basically, you can't trace it directly. You know it related, but you cannot trace it directly. So, for example, other expenses that you know relate to making the product, but you can't trace it to each item. So, for example, the salary of the accountant, you cannot trace that to each item that is produced, or the salary of the production manager. Probably you can't necessarily trace that because that move up and down, and that probably a fixed amount, even though production might fluctuate. Right? So those are some things that are indirect costs. You can't trace them directly to the product, but they still relate to that particular department or that particular item or that particular service. So now production overheads, and this is what we call overheads. Overheads, as long as it is not a part of the prime cost, it end up more than likely fall under overheads. prime cost would be the direct material, direct labor, and direct expense. And then everything else normally is considered as overheads. So that would be indirect material, indirect wages, and indirect expenses, right? So, and that is basically, these are items that sometimes not all of it they can charge to production. So for example, you pay insurance, that's an indirect expense, where you pay insurance for the whole property. The factory probably is half of the property, and then the other departments are the other half, the other building, the office building. They have to split it, they have to share it, half towards the factory, half towards the office building or office expense. But so these items are normally known as overhead. So you really have two main things. You have prime costs and you have overheads. Prime cost is everything direct, direct material, direct labor, direct expense. And then overheads is indirect material, indirect wages, indirect expenses. The difference, the direct one can trace to the specific product or the specific job or the specific department or the specific service. The indirect one cannot be traced to a specific item. You know the total cost, but you cannot trace it to a specific items. And sometimes it has to be shared across departments. So this one says identify and group the costs involved in the production of a music CD. Well, let's just do that quick. Let's look at the example. A CD, direct would be the CD itself and the box to put the CD in. The labor would be the staff that make the CD. Expenses would be the royalty you pay for each CD you produce. So every CD you produce of somebody's track, then you have to pay them royalty, then that is a direct expense. What is indirect is the oil for the grease for the machine. Because the machine, you can't trace the grease to the specific item that if I put 2 ounces of grease, I will make 70 CDs. No, you can't. So that means it's indirect. But you know that the grease is an expense in doing the production. The supervisor as well. The supervisor is there, but sometimes the staff might produce 5, sometimes the staff might produce 50. The supervisor can't trace his salary to a specific item. It's just like it is monitored, and then you're going to have to share the supervisor's salary as a part of the expenses. And other expenses like rent, rates, insurance, utilities, etc. Now, you have admin overheads. Now, admin overheads is anything that don't relate to the production or the factory. So these are all indirect material costs, wages, and expenses, like a stationery, depreciating the office building, the director's salary, the accountant's salary. Those things where the accountant have nothing to do with production, so the accountant wouldn't fall under the production overheads. It would fall under the administrative overheads. Because the main type of overheads you might have is production overheads, admin overheads, and the admin overheads basically would go in the income statement. And then you have like selling overheads, like costs incurred to sell, your advertising, your promotion, etc. So you have your admin overheads, and those are examples. And your selling overheads, the example would be like making magazines, catalogs, doing ads and promotions, the salary and the commission for the sales staff and the marketing staff, etc. So those basically would be the selling overheads. There actually is one more, and normally they split. So sometimes they call selling and distribution as one, and sometimes they split it. It don't make any difference. It don't make any difference, right? So the distribution now basically will be the delivery people, right? So the distribution overhead, even though it's a part of the sale, but they might not actually make the sale. So it's probably the delivery people, those who pack, the people in the warehouse, people with the delivery, and the warehouse rent, etc. So those are other overheads. So now that we go through direct costs and indirect costs, the other type of cost you might hear is what we call functional costs. Now, in a traditional costing system, you're basically going to have a production or manufacturing costs, administrative costs, marketing, selling, and distribution costs. You might have also research costs, development costs, finance costs. So those are some costs and general overheads. Those are the things that you might have. Those are what you call functional costs, like the main categories of costs you might have. For example, the main categories of costs you might have in your trading and profit and loss or your income statement. Now, the other types of costs as well is you have your fixed and you have variable and you have in between, right? So you have fixed, you have variable, and you have what you call semi-variable or semi-fixed. We're going to look what is a fixed cost. The rent of a building. It don't matter how many items you're producing that building. The rent is one rent. It don't matter how many people live in the house. The rent is one rent. That is the rent for the house, right? Business rates. Well, we don't use that here, but that is also something that's normally fixed. The director salary. The director might get a specific salary, $500,000 a month. That's the director salary. It's fixed. It don't change. It don't matter if you produce a lot or produce little, the director is going to get basically the same salary. Variable cost now, it fluctuates. So variable costs change with the level of activity. So the variable cost is going to change with the level of activity. So basically you have like the direct material, direct labor, and your sales commission. That basically change with the level of activity. Some costs might be semi-variable, and we look at that a little later. But we have fixed, don't change, variable, it move, it vary with the activity. The more activity, the more the cost. The less the activity, the less the cost. And we'll see some diagrams and stuff later in terms of how costs behave. Now, the pool of the total cost, as we say, you have production costs, you have non-production costs. So the production cost, you could have split production costs between your prime costs and your production overheads. Your non-production costs can be your admin overheads, your selling overheads, your distribution overheads, your finance costs. Those things are all non-production costs. So, and that doesn't really require a lot of explanation as to what is production and what is non-production, because we have an idea. We just went through the whole thing about prime costs already. So let's say give some example of what are production, what are non-production. I just mentioned some examples. Production costs would be the raw material to produce, the production staff, the factory rent. Non-production will be the sales staff, the finance, the accounts department, the admin department, distribution staff. All of those who are not related to specifically producing the item. Another thing you will see is what you call now cost codes, where costs might be classified or coded in a system. So you might code it so that it's easier to identify in a system, right? How they might code the cost, they might do it, the characteristic they might use is the nature of the cost. So they might code their material, labor, and overhead. Or they might code it based on the type. So for example, they might put a code M001, that means you know what that is a material. L002, that is a labor cost. O005 or something like that. So it might be based on the nature, or it might be based on the type. They might put D112, which would, is a direct cost, or, ID00, whatever, that might be an indirect cost. So they choose a specific method to use to put what a cost code is, so you can identify it when you're doing your costing. And as I said, the department which you're in, it depends on how the costing will be done. So for example, it depends on your type of business. What is a cost unit and what is a cost object? A cost unit is a unit of product or service to which cost can be related to, where you can trace the cost. So for example, in a hospital, you can trace the cost to, okay, the patient bed per night. All the costs related to that patient on a bed for a night. You can trace all the costs related to a patient. A barrel in a brewing industry. So each barrel, you can trace all the costs to that barrel of rum. Or a hotel. What are all the costs related to that room? Room number 5. What are the costs related to room number 5? How much did we pay the person to clean? How much did we pay? What was the cost of the items we put in the room? The things we put in the fridge. What is the cost of those items? So you can trace it specific to all the costs related to that room to see if you made any money off that room or not. That is the cost unit. The cost object now is any activity for which a separate measurement of cost is desired. So any activity. So now the cost object would be like the cost of a product, or the cost of a service, or the cost of a department. So go again. So the cost unit, as we say, is a unit of product or service you can relate the cost to, right? Whereas the cost object is any activity. So the unit have to do with a unit, the object have to do with an activity. So okay, what is the cost of producing a product, the cost of a service, the cost of the accounts department or operating a department? Other definitions you need to be clear on is what is a responsibility center. And this is a department whose performance is directly responsible. Is the direct responsibility of a specific manager. A cost center, as we know, is a collecting place for costs before they are analyzed. A revenue center is where you collect the revenues before they are analyzed. So those are some of the things that you would have there. And then a profit center is where you collect both costs and revenues. Investment center, responsible for cost, revenue, as well as investment. So the words are not hard. to really relate to because they're kind of self-explanatory. This one says the same thing about the CD. It says suggest some examples of production cost centers and service cost centers within a closed manufacturing factory, a food production business, and a CD manufacturer. And we can look at that. We can look at that straight. So in a closed manufacturing, you might have cost centers like the machining department or the finishing department. For food, you might have the mixing department, you might have the stirring department. For seed, you might have the pressing department, you might have the packing department. Those are the production cost centers. Service centers now will be those that assist those departments. So the canteen, you have to feed the staff. So that is, they're not producing anything. We have to feed the staff. The maintenance department, you have to look after the machine, the production machine, but they're not doing production, but you have to pay them in order to ensure that the machines are always working. The stores department, so the warehouse, so to store all of the things that you need, that you can always have access to, so you can continuously be producing, then that, of course, is a service center. So that basically would cover the first half of the chapter. Looking at what are the main things in the first half, chapter 3A. 3B will now look at cost behavior. But the main part in 3A is looking at production and non-production costs, direct and indirect costs, what are cost objects, cost units, and cost centers, and then codes, the coding system. Right? So those are some critical things. 1 second. Okay, so the next thing basically now is cost behavior. Looking at cost behavior patterns, cost estimation, and linear equation. So that's the next thing. All right, so let's now look at these now. We spoke about two types already. We spoke about variable costs and we spoke about fixed costs. The other things we have what you would call now stepped fixed costs, semi-variable costs, or what they call mixed costs. And then how are we going to be able to estimate certain costs when it is mixed? So we're going to be looking at certain techniques like the high-low method or using linear equation that probably coming from maths before, but we're going to be looking at both, inshallah. As we said, the costing part is very critical because normally cost management accounting is also called cost accounting. A lot of people just call it the same thing because primarily a lot of what you do is cost accounting in management accounting. So now cost behavior. How do costs behave? That's what it really is. So how do fixed costs, does fixed costs change with activity level? Does variable costs change? Are there any other type? If there's a mixed cost, if there's a semi-variable, how do you know what portion of it is fixed, what portion is not? For example, a light bill. Even if you don't use the light and you turn off all the breakers, you're still going to get a light bill because there's a fixed cost. Then when you turn on the breaker and turn on the light, it's going to be you're going to be billed per kilowatt hour. So there's a fixed cost plus a variable cost. So your light bill would be semi-variable. Same thing with your water bill. You shut off the meter, you're still going to have a bill. All right, they're still going to charge you. So what you're going to have to do is know what is the difference, what is fixed and what is not. All right, so looking at certain patterns, as we say, it is the way in which basically it's affected by change in volume or output. So that's what the focus is. How is it affected by changes in volume of output? So again, two are the main things we spoke about. So we said fixed costs is a cost, it's unaffected, normally it's unaffected by increase or decrease in activity. So for example, your rent not going to change unless the landlord increase it, but it's not going to change based on how many people sleep in the house tonight and how many sleep in it tomorrow. That's not going to change because it's a fixed amount. So if nobody is home, they still pay the same rent. If everybody is home, they still pay the same rent. If some home, some not, they still pay the same rent. Right? A step cost now is a little bit different. So for example, you might say, you know what? This warehouse, I have one supervisor because it's 10 people they are supervising. Okay. So as long as they're supervising 10 people, you don't need more than one supervisor. They can manage to supervise the 10 people. But what you know is that if, for example, you hire two more people, you might want another supervisor because that one supervisor cannot manage to monitor 12 people. So you end up have to pay a whole new salary to another person just that they can help manage two more. That means even if if you get another three more staff, now you have 15 people, you still can't keep the two supervisor. You have 18 people, you still can keep the two supervisor. But when you reach 20, when you pass 20 now, you might end up have to employ another because you know that each of them will probably cannot manage to monitor more than 10. And similarly for a warehouse, right? They have a warehouse space, the capacity is 100 items, right? If it is 100 items, once you have 100 items, you're okay. But if you have 110, just 10 more, you end up have to go rent another warehouse space, right? And then you're okay. Once you have up to 119 and reach 200, but when you reach 205, you end up have to rent another warehouse space. So that's how steps fixed costs go. So it remains constant at an activity level. Then it increases significantly when it goes above, and then it remains constant again at another range of activity. So that basically is how the step cost goes. Variable cost, as we say, it just changes with the level of activity. And then the semi-variable, as I mentioned, like the light bill, or even some people's salary, they get a fixed salary plus a commission. So that would be a mixed cost or a semi-variable cost or a semi-fixed cost. They all mean the same thing. So then they ask now, what do you think the graphs would look like? So I want us to now look on the graphs. We're going to focus on the graphs. Fixed costs, total fixed costs. So for example, the graph would look like this. The total fixed cost, the graph would look like that. So for it stays there and it remains there based on the volume of activity, it doesn't change. So the rent remains the same. Even if you don't produce anything, no volume at all, the rent stays at that figure. If you produce a significant amount, it remains the same. That would be how the graph would look. For the step fixed costs, it would remain the same to a particular level. Then it would just step up, remain the same to a particular level, step up, again, just as we mentioned about the supervisor or the warehouse space. So the supervisor can supervise up to a certain amount of people, or the warehouse space can have up to a certain capacity. So those are the two examples for the step fixed costs. The third one would look like this, the variable costs. So variable costs, you notice it would just move in line. So you're going with your activity level. And that would be a total variable cost. So you're going to see another graph that looks very similar to the fixed cost graph that we had. Your mixed cost now, or your semi-fixed or your semi-variable, it wouldn't start from zero. It would start from a point because it, just as we say, a telephone bill, or even somebody's a supervisor salary, they have a base salary, or your telephone bill, or your light bill, or your water. There is a fixed component, even if you don't use any of it at all, if there's no activity. And then if there's activity, it increases variably. So that would be how the diagram for the mixed cost looks. Now, they don't have the other diagram here, but this diagram could also be a diagram for variable cost per unit. So the one that we saw going up was total variable cost, but the variable cost per unit could look like this as well. Why? Because if it's $5 to produce, a sweetie, then if you produce 25 sweetie, the variable cost to produce each sweetie is still $5. So it can look the same. So even though this is total fixed cost, you can have a diagram like this, which also means variable cost per unit. So this is total step fixed cost. This is total variable cost. And then this would be the mixed cost. All right, so then we now look basically on the pattern. So now you can have as well. So some variable costs might have a curve. How is that possible now? How would you explain that? Now, some variable costs might have a curve. So you might see it curving down, and sometimes you probably even see it curving up, right? Why would it be curving down? Because it's what you call that, things start getting cheaper. You call economies of scale. So, right, so even though, let's say it was $5 per unit, you make 100 units, you see it keep going up, going up, going up. But when you produce over a certain amount, the cost, probably a production cost start going down, or maybe you're purchasing items and you get a volume discount over a certain activity level, right? So you basically can use that as well. So that could be a reason why you see it curving down. Why would it be curving up? It's because, yes, it's variable for a certain point in time, but you start giving people probably an incentive. So probably somebody, you're giving them $5 per unit to produce, but if they produce over 100, they start giving them $6 because you want to incentivize and motivate them. So the variable cost per unit increases. So when you see it going down, might be based on a discount or economies of scale. When you see it's going up, it might be an incentive you're giving, right? So that people can produce more. Right, so now assumptions about cost behavior. Now within the normal or relevant range of output, costs are often assumed to either be fixed, variable, or semi-variable. That's normally within the normal range. The normal activity, that's what you assume. Now, whenever there's a semi-variable cost, you're going to use what you call the high-low method, right? So whenever there's semi-variable cost, the high-low method is what you're going to use. How does that work? There are 5 steps there, but what it basically means, choose the highest. What you're going to look at the highest activity level with the cost relating to it, the lowest activity level with the cost relating to it, and then you calculate the difference between the costs and the difference between the activity. And it's always money on top. So it's going to be the cost over the activity. So money always on the top, right? So yes, you have all of these 5 steps, but basically what the steps saying is that choose the highest activity level with the cost that relates to it, the lowest activity level with the cost that relates to it, and then you work out what is the change in the cost over the change in the activity. So for example, for this one, the highest activity is 10,000. The activity and cost, right? Activity would be the one that is not the cost. So it's the output. So the activity, the highest activity is 10,000 units. The lowest activity is 2,000 units. Where you're going to look at the cost that goes with it, right? So, and again, what is the difference between those two costs and the two activity? And the cost go on top. 4,000 minus 1,600, 24. So that's what's on the top, divided by 10,000 minus 2,000. It's going to be 24 over 8,000. And then that is going to tell you what is the variable cost per unit. So the high-low method will take out what is the variable part, right? And then after that now, you're going to use a formula to say, okay, what proportion of it is fixed, okay? So let's use this example. The highest activity level was 10,000 units and the cost was 4,000. The lowest activity level was 2,000 units, the cost was 1,600. How you get the variable cost per unit? The change in the cost over the change in activity. So we'll put that change in cost over change in activity, and then we get our 30 cents per unit. Now we can choose any one of the other things to know what the fixed cost is. Fixed cost is equal to total cost minus, open bracket, the activity times the variable cost per unit. That's how you get fixed costs. So fixed cost is total cost minus, open bracket, the activity times the variable cost per unit. That's how you're going to get the fixed cost. So for example, you can choose any one. You could have chose the 10,000 units one or the 2,000 units. The total cost for 10,000 units was $4,000. So 4,000 minus the 10,000 units times the 30 cents, that give you $1,000. If you use the other one, you get $1,000. So the variable cost per unit is 30 cents per unit, and the total fixed cost is $1,000. So that basically would be that. So you have another example. So they ask you, what would the equation be? I want y'all to try this one right now. So again, the activity is which is not the money. So again, choose the highest activity with the cost, the lowest activity with the cost. Put the change, calculate the change in cost at the top over the change in the activity. That will be the variable cost per unit. And then after you get your variable cost per unit, you're going to use the total cost for any one of them and minus, open bracket, the output for that one times the variable cost per unit. So let's work that and see what we get. Now remember that those figures there are actually in thousands, so you can use the thousands as well. So the highest activity there look like 1,000 and the lowest activity look like 200. So carry the figures that go with it. It will be 110,000 and 30,000. So use those and see what you get. What would be the variable cost per unit and what would be the total fixed cost?
Abu says what over what to get the variable cost again?
There's always a change in the cost over the change in the activity.
Okay.
So to get variable cost per unit, it is change in cost over change in activity. And then to get total fixed costs, it is total cost minus, open bracket, the activity times the variable cost per unit, close bracket.
Is it a big number?
Which one? Yeah, which one are the numbers? The variable costs are the
So variable cost is $100, right?
$100? Okay.
And the fixed cost 10,000. Wait, 100, yeah, 10,000.
So which one is the answer?
D.
D. Right? So D would be the answer. Because again, change in costs over change in units or change in activity. Once we do that, we will get it. And to get your fixed costs, you're going to do your substitution. It's going to be, because that is normally how your formula is. So to get the fixed cost, you're going to be fixed cost going to equal to the total cost minus, open bracket, activity level times variable cost per unit.
Wait,
Right.
Abu, can you go back on the thing there? The question.
All right, so I move on from this.
All right, okay.
All right, so we have that answer would be D. So based on this question, so now we know the equation. So what this is saying, you see what this equation means is that now any activity level, you can predict what the total cost is supposed to be. Because total cost is fixed cost plus variable cost per unit times the output. So if I ask you, what if we had produced 510 units? Then all you have to do is 10,000 plus 100 times 510, and then that will give you the total cost. So for example, in this one, they ask you, what if they expect to produce 780 units? So what will be the total cost? What if they expect to produce 780 units? What will be the total cost? Remember, this is the equation, right? 10,000 plus 100x. So if they want to produce 780 units, what will the total cost be? You expect the total cost to be for that. So that's the equation. If it's 780 units, what you expect the total cost to be? They produce 780 units. What we get? If they expect to produce 780 units, what would be the total cost?
88.
88,000. Right? They use the same equation, you get 88,000. All right, so here's one more question. So we're trying to practice enough to get this one out the way, the high-low method. So this should be it for it. So based on this now, it says now, look at this one now. This one, we're gonna have to go through this together. It says total costs are made up of two elements, a step fixed cost that changes when the unit exceed 7,000 and some variable costs which remain constant. So they ask, what are the total fixed costs at production levels below and above 7,000 units? And what is the variable cost per unit. All right. You know how you're going to figure that out? This is the approach. Whenever they tell you that this fixed cost increase over a certain level, then you can't use the regular high-low, right? You can't say, all right, use the highest at the lowest. What you have to use two activity level that is below that number or two activity level that is above that number. So they tell you that because remember, the figure kind of manipulated or messed up, or it has something in it that you need to fix. So if they tell you that the fixed cost change at 7,000, you need to see, or you need to get two activity above 7,000 or two activity below 7,000, because you want two activity that it's not manipulated or two that is manipulated. Mean basically like with like. You kind of want to put like with like. So what we would choose is the 7,500 and the 10,000. We choose those as the two activities. And it's always money, it's always the cost over the activity. So we're going to use the high-low method now, but we have to choose the 7,500 and the 10,000. We're not going to choose the 5,000 because the 5,000 is below 7, and then the other figures are above 7, so it won't work. To get the real variable cost, because that's the first thing we always have to work out, to get the variable cost, ensure you use two activity levels below where it changes, or two activity levels above where it actually changes. So we're going to have to use it, in this case, based on the question, we have to use the 7,500 and the 10,000. When we use that, what is the variable cost per unit? Let's work that first. What is the variable cost per unit? What we get as the variable cost per unit?
5.4.
Right? $5.40. Right? So we get it as $5.40. You see, when you see now that you have the variable cost per unit, you can figure out what is the fixed cost above 7,000 activity and below 7,000 activity. How you do that now? You're going to use the same total cost. You're going to use the same total cost equation and work it for any one of the activity that is above the 7,000 and one of the activity that is below the 7,000. That's how you're going to know what the fixed cost is above 7,000 units and what it is below 7,000 units. So when we have the $5.40, we're just going to use the fixed cost equation, and this is what we would do basically. So again, use the same equation, but you use any one. So you can use the 7,500 or the 10,000. When you use that now, you do up your equation as regular, and you realize that the fixed cost is going to be 36,000. The regular, okay, you're going to say 76,500 minus 7,500 times $5.40. And then for the one below the 7,000, you're going to say 54,500 minus 5,000 times $5.40, and then you get 27,500. So that's what they ask you for. So for what is the fixed cost for activity level above 7,000? The fixed cost is 36,000. What is the fixed cost for activity below 7,000? Fixed cost is 27,500. And this basically, there's no other technicality in the high-low method. You just have to remember these principles. The only technical thing is when they tell you that the fixed cost changes above a certain activity, how you're going to work with your variable costs. Ensure you use two numbers below the activity or two numbers above. Don't use one below and one above because your answer is going to be wrong. But when you want to know which fixed cost they want, read the question. If they want the fixed cost above, then use one of those activity levels. If they want to know what is the fixed cost below that activity, then use one of the fixed costs below that activity level. So here is one question. All right, so this question, they give you some numbers. What would be the variable cost per unit? So look on this, read it carefully, right? And then I just want the variable cost. When I need the whole fixed cost part, what is the variable? This is a past paper. So what is the variable cost per unit? Look at this, read it carefully, and work out what is the variable cost per unit. Remember the activity levels. This one changes. So make sure you choose either two below or two above and get your variable cost per unit.
But when we're choosing the two above, would we have to add on $200 to the cost as well?
No, you add nothing. No, add nothing.
Okay.
When you choose two activity, but if you notice they put this there different way, right? You notice they always put on the left, they always put the output, and on the right, they put the cost. They switch it around. So be careful, right? So be careful. The output is on the other side. Normally, you used to the output on the other side. So again, choose two activity levels, either below where them say the cost change, or two that are above where them say the cost change.
Is the variable cost $3?
All right, let's see. So you have some workings there. All right, you have some numbers there. And you said 3. So let's see if it is actually 3. Based on what the examiner says, what are the various ways people could have calculated it? It's looking on the chain. So the correct answer is actually what?
1.67.
How we get the 1.67? Let's show. Because this one, they did it to change it up a little. So it says what? The correct answer is this can be kept by finding the change in cost between the highest and lowest output level not explained by the step in fixed cost. Yes, the highest and the lowest. Okay, that is that the step didn't change. So the highest and the lowest, in this case, before the step up. So the highest would be the 3 and the 1,000. But it should actually have got the same thing with that one anyway still. So it would have been 10 minus 4, that's 6 over, what's that? Oh, you got the cost here, so 10 minus 4. And this is 2, so that's 6 over 2. You get 3. So let me see what the math, let me see what they do the maths here. And dividing by the change in output between the highest and the lowest. So what did they use? They use the 95, that minus 5 to $100. Or they adjust it with the step cost. I don't like this question at all. But okay, so this is how they did this question. You see, because they tell you what the step cost is, I get it. Because they tell you what the amount is. That is why they are saying still use the high-low method, but subtract the extra figure. So what they are saying is that still use the high because they told you the amount. If they didn't give you the amount, so this is good to that we did this question just in case. If they didn't give you the amount, then you have to choose two activity below or two activity, the highest and the lowest below or the highest and the lowest above it. But this case, they actually told you what the amount is. So because them tell you what the amount is, still use the high and the low, and then subtract the 500 from that. Okay, you know, 500 extra is in it. Right, so that's basically what they did. So they said, yes, you still have to use the 4,000 and the 1, but since the 4,000 have an extra 500 in the cost, subtract the 500 from it. So you have 9,000 over 4 minus 4,000 over 4,000 minus 1,000. Right, so that's how they got the $1.67. What we just did, this is basically the equation. When you put it as a linear equation, Y is the total cost, A is the total fixed cost, B is the variable cost per unit, X is the activity level. That's really what you did. But the putting all of those letters there basically is just the equation, showing it technically, summarizing the equation. But the Y is basically was your total cost, the A was your total fixed cost, the B was the variable cost per unit, and the X was your activity level. Right? So then it shows you all of these. It shows you start at what the fixed cost is, and then variable costs keep going up. So if you notice how they use these diagrams, you don't necessarily not going to get diagram to draw in the exam. As you know, it's a computer-based exam. But it's good to know what the equations mean. Right? So it's good to know what the equations mean. So this basically showing you a little bit in terms of how your graph would look, plotting your graph. But again, that's not something you're going to plot. So I'm just going past that. And that pretty much ends the chapter. That ends chapter 3. So chapter 3 really was looking at cost behavior and output, estimating cost using the high-low method, and then understanding the linear equation. That really is it. So what the Y represents, in this case for costing, the Y represents total cost, the A represents total fixed cost, the B represents variable cost per unit, and the X represents your activity level, right? So that normally would be what the representation of the equation is. And that basically finishes the chapter. So I had emailed you all the summary notes. So again, the summary notes is probably 14, 15 pages of all of what we just did. And then I emailed you the questions. So there's more questions because these are calculations now. So it's about 30 something questions. I'm not sure y'all gonna finish it by tonight, but whatever. If you finish the first set, then we can look at the first set, and then probably tomorrow we look at the second set, inshallah. But if you finish everything, then we can look at everything, inshallah. So yeah, so this one is a bit more. So we'll whether if you don't finish all of it tonight, then that's fine. You can probably look through the summary notes just in case you need a recap before we do. But that's pretty much it.
Abu, you said you're gonna email it to us?
I emailed it already, sent it already. So the practice questions and the summary notes, I emailed it already.
Okay.
Just before the class.
Oh yeah, I see.
All right, so that's pretty much it. All right, assalamu alaikum.
Wa alaikum assalam.
سبحانك وبحمدك ونشهد أن لا إله إلا أنت ونستغفرك ونتوب إليك.
Bye guys.